Welcome to this week's market drama. We will begin with the S&P 500, which was up 1% for the week. It is now up 19.3% for the year. NASDAQ was up even more, up 2%. It is now up 37% year to date. Another noteworthy market number here is oil was up 3% in the week. It is now flat year to date. So what drove the market this week? The biggest, there's two main headline news here. One is the Fed met on Tuesday and Wednesday, and they announced on Wednesday in their July FOMC meeting that they're hiking interest rates 25 basis points. This was fairly much expected. So now this brings Fed funds rates to 5.25 to 5.5. What is important to note here is that the Fed chair, Powell, was careful not to declare mission accomplished. He did emphasize that they are, in a sense, hiking interest rates further is not out of the question, but they're just going to have to see how the data plays out to see where they go. And the next time we'll hear from them is in September. The market is pricing. You look at the futures market, they're expecting now the Fed to not hike anymore and to actually lower interest rates in March of next year. And there's definitely inflation data to point that the Fed might be done, right? So the good news here is when you look at, for instance, core PCE data, which hit this past week, it continues to moderate, right? June data came in at 4.1% year over year. That was better than expected at 4.2, which was the number that the market was kind of baking in. Last month was 4.6, right? So it continues to come down, and this core PCE inflation number is really sticky. So if it continues to move in one direction, it tends to kind of continue to move in that direction. So that's the good news there. And I think why the market's kind of seeing this as maybe the Fed's done, right? On the, call it bear side of what to look for here is that oil has been on a tear, right? Oil is now up 19% the last 30 days. It's at $80 per barrel. If you look at CRM commodities index, a broader measure of commodities, is up 11% in July. So that's going to start showing up in food and energy prices for headline CPI numbers when we look at July numbers in August. So we're not totally out of the woods, right? When it comes to inflation, kind of slaying inflation, if you will. And usually starts with energy and food prices going up. And then eventually, the market might get a little bit nervous on that. But we'll see. Maybe this is just a one-off that oil went to $80. But that's on the negative side. On the positive side, we did see good news out of GDP data, gross domestic product number. No sign of an imminent recession, essentially, right? We've seen more of like rolling recessions in some parts of the economy, like manufacturing and housing. While essentially they're starting to stabilize, we might see services start to cool off, but it's more like these rolling things. So the market is rallying the back of the trifecta. Fed and other central banks might be nearing rate hikes. Inflation continues to moderate, and economic growth remains resilient. So no surprise, the S&P 500 is up 19% year to date. So we'll have to keep an eye on that. The last thing that was also positive news is we've seen markets start to see a broadening of leadership. Stocks in the small cap world, cyclical stocks, have done well, which is a good sign. So we'll keep an eye on that. If that continues to happen, it could give further validation to the bull story here for stocks. This coming week, we have U.S. payrolls for July and U.S. hourly wages, which also will be helpful to give us a sense on how inflation might look in the coming months. So that's it for this week. Stay tuned for next week.